Hey guys, in this video I want to walk through a call credit spread strategy with the RSI that has a really high win rate. So let's dive into it and talk about the specifics of the strategy, what markets it works in, and what stocks it works best with. So the first thing we need to do is we need to pop open up a trading chart. So we can do that on our broker, or we can go to a website like tradingview.com, which is what I'm on right now. Next, we need to go to the indicators section and add the RSI, which stands for Relative Strength Index. So right here we have the relative strength index. We add that to our chart. It comes to the bottom and it shows what's going on. Essentially, what we see here is we see two lines on this bottom, a line at 70 and a line at 30. Essentially, if it gets above 70, that means that the stock is overbought and it's likely to come back down. It's a bit too overextended. The same way to the downside. If it gets below 30, it tends to be a bit oversold, and that means the stock is most likely going to bounce around that level. However, when we combine the RSI movements with the stocks movements, then we can unlock a lot of cool strategies and patterns. For instance, the RSI divergence play, which I want to talk about with call credit spreads today. Why? Because SPY set up for it perfectly, and I want to walk you through it. So this is called an RSI divergence play, and that is because we want the stock and the RSI to be doing two different things. You can see here's one high from SPY, and if I track out it up to the other high, you can see here that the highs on SPY are getting higher. Now at the same time, we see a divergence in the RSI. This shows the divergence of the RSI going lower. Okay, cool. So what we're seeing here is that we're approaching highs that we haven't hit in a while. We're getting a lot of resistance because the stock is slowing down. We get this RSI divergence, which is indicative of a reversal. And then now we start to see that loop down where we're starting to see some momentum starting to break through support levels and now heading lower. Now again, will it continue lower? That is not for me to say. All I can say is the RSI helps us predict this initial little move down. And so we don't know how far it will move down. We just know that it's going to have a great indication of moving lower. So when we start hitting into these ranges like this, and we see doji candles like this form, we can easily enter far out of the money call credit spreads, which allows us to make money to the downside. It's a very simple strategy that can be repeated. Now again, we can also do this with put credit spreads, and I'll show that in another video. But this is how it works with call credit spreads. So we find this setup. We go decently far out of the money, as far as we can, to collect at least 15 to 20 cents on a $1 wide. As long as the stock stays below this level, then we make money. We'll trade that out roughly 1 to 2 weeks, maybe even 3 weeks if we can collect enough money. And so that's typically how you set up this call credit spread trade to make money to the downside. And that's how it worked out here. I do want to give some caveats though. Number one is the RSI divergence strategy does work, but it works best in overextended markets, stocks that have been running up for a very long time. You can see here that SPY has been running up for a long time, and it's due for at least a small pullback, and that's one reason why it worked. Number two, it works best in sideways markets as well. When you have a market where it's just staying in between two ranges, up, down, up, down, up, down, that's a very clear indication that it's going to work as well. Number three, this strategy was built on the back of commodity trading strategies and futures trading strategies, which means this strategy can work on stocks. However, it works best on ETFs. SPY is an ETF. So again, ETFs that track futures are going to be the ETFs that have the highest success rate with this strategy. So if you want to trade this strategy, use ETFs, use RSI divergence, look for highs, look for sideways markets, look for this diverging pattern, enter a far out of the money call credit spread, and you should be able to make an easy 10 to 15% return on your capital in a matter of 2 weeks. This is the strategy. If you want to learn more about the strategies that I use and have developed over 5 years, click the link down below. You can get access to my free credit spread trading hand guide, and it's going to walk you through all the strategies, sizing rules, early exits, and so much more for free. Anyways, guys, thank you so much for watching this video. If you're trying to get better at credit spreads, smash that subscribe button because I make videos to help become a better credit spread trader every single day. All right, guys, I will catch you in the next video.